Okay, good afternoon, or it's afternoon where I am, so it's hello would be more appropriate to everyone. So what I'm going to show you now is basically how I use intraday price action, namely an hourly chart, to plan for my next week, right? So I'm picking up here. I don't normally trade to remain unbiased. And yes, it is a hindsight that I will be showing you, but I just want you to see it on another pair so that you can't say I use my bias on EU or gold or EU. And if you understand the concept or the idea and you implement it, you should see major increases in your success rate, right? So to start, I have two charts here of GU. This is 2 weeks ago, and the other one is 3 weeks ago. So there's two charts here. I'll be showing you this chart and this chart. What I have highlighted here so far are this high right here and this high right here. Why I would have these highlighted this week. So what this would have been the end of the week and you'd be planning for the coming week, right? This is where liquidity would be resting if you are familiar with the terms. If not, please visit ICT's YouTube channel and you can learn about all that. This is not a teaching video of any sort, just sharing my my review process. So if this is going to be the target for the coming week, right? We all know that, or we all share a bullish bias. So what we want to be doing in the coming week is to use the previous week's price action to frame out where we should likely look for a trade setup, right? So if this was the end of the week and I'm reviewing the week, firstly, I'd want to know where price is likely going to be drawn to in the coming week. We have that here. So now my bias is bullish. All right, so I have that down pat. My bias is bullish. So I'm not going to be pulling up a chart and then saying, is this bullish or bearish, and try to buy or sell. I already know before the week starts that I want to be bullish. So now I take this chart right here and I'd look at where stops would be resting. Okay, so just looking at this here, the first thing that comes to mind would be ICT market maker model, where we have the stops resting above here, smart money reversal, low risk buy, and all that, and that's the drawn liquidity, right? With that in mind, I'd be using this area right here as some sort of a consolidation. So I'm gonna put some colors on this. That box is black because I changed the color to hide a part of the chart. So high formed here and the low formed here because this low didn't take out that. Yes, we had this high trading through this afterwards, but initially this is the consolidation area that I'd be looking at. Cool. So now I have the consolidation areas, and we all know that relatively equal lows would be housing stops. So for clarity, I can just tag here and say the stops are resting down there. At the end of the week, we did see Friday, or yeah, this is Friday, Friday's Asian session, take out the liquidity resting down here. So once this has happened now, there's no, if we're indeed looking at a market maker model, if the stops are now taken here below the consolidation, this should be the only area that price is drawn to. So in the coming week, when I'm using this week's price action, the only thing I'm going to be focused on is this low, this high. That's going to be my range now because stops have already been taken from below here. And this is now the start of the new range. So consolidation is here, they're already taken, stops from down here. This is the draw. So I'd put a fib on this. And you can put whatever levels you want on your fib. I am an ICT student, so I don't keep a whole lot of stuff on my fib. I'd have my 50 level marked out. And that would have been right there. That's my 50 level. And I'm now looking at potentially a 148 pip move for the week that is coming, all right? Once I have that in mind, I'm only going to be looking for price to trade down to this blue line in the next week. Once that forms, I'm going to look for a setup. I'm not going to just buy it when it comes back there. I'm going to be looking for a setup or an entry pattern or any kind of confluences I can find that can get me in here. So if you look at this price swing, since this is the only one we're interested in now, if you look at this price swing, and this is 50% of the price swing, I'm looking for any kind of order blocks or any imbalances or anything that price can trade back into right here to give me a setup. While I'm not going to go over everything that's here, I'll leave that for you to break down that chart and look for whatever your entry pattern is. One thing I want to point out is this level, 1.370309, that level is where I'm going to be looking for setups to form. All right. Once I get my setups, I'm going to be aiming for here. If you are familiar with the templates for the week, I guess that's when you could start mapping which template would be more ideal to look for in this week based on news drivers and any anticipated volatility events. All right, so once I have that down pat, now we can move into the next week. So as I had mentioned before, I had hidden this bit of price action to remain unbiased. So now this is the week. The new week is from here. Let me just put it over here. I don't want that price action to cloud your judgment. Monday, we have price trading down here, and then it left. So remember, this is your range. This is the initial range we're working with from here to here because stops were taken. Monday trades down, didn't get to the level, and then it left. Now, when I see this, I'm thinking like a market maker. I'm not thinking like a trader. And my idea is now that stops are going to be resting down here. The stops are going to be resting in an area that's very close to my point of interest or area that I want to enter. So now I'm anticipating some kind of raid of these stops to hit that line, and then I can start getting my trading. All right. And this is Tuesday's price action, which trades down from Monday. Then at the start of Wednesday, we have price trading below this low right here, hitting that blue line and then leave. That's when we can start looking for setups, right? So this is an hourly chart. So what you can do now, if you were looking at this live, is once we leave here or once we hit here, you drop to a lower time frame and look for whatever your entry patterns are, order blocks, breaker structure, whatever it is. And then you can start targeting areas where, you know, logical areas where you should get out. Like if you enter here, let me use this. If you enter here for a buy, you have to be looking for at highs that were created before here as logical areas that you could exit. If you're entering down here, if you're waiting for a breaker structure and then trading back down to get something in here, then you look at this high and all the highs created at the start of the week as potential areas we could take partials and adjust your stops and then leave the rest to run. If you're planning to trade the full weekly range. If not, then you can get multiple 10 pip trades in here. All of, and they're obvious if you jump to a lower time frame. So with just that idea alone, we could see how we could potentially get the low of the week here and then be getting out up here, right? And that's it. If you want to break down this chart and look for whatever confluence, time of day, day of week, Be my guess, but that's as far as I'll guide you in that aspect. This is where Friday ends, right up to that liquidity pool, and then we trade off of it on Friday. Let me go over a little more. Right, so Friday hits that and then leaves. Now, if we just took liquidity up here, and that's the model, the ICT market maker model, price should now leave here. So going into the next week, my bias is that price should leave here. Now, when we're looking at this week, the stops were resting below these lows and then they were purged in the same week. So we didn't anticipate a run below here before a continuation. In this week, however, let's hop over to this chart. In this week, however, we now have lows down here, clean lows that were not taken, which means you find the lower one, whichever one is lower. I think this is the lower one. Right there. So this is potentially the low of the week. If this is the low of the week and this is the high of the week, I'm going to be looking at, not logically, order blocks formed up here to get sell entries. And then this is where I'm looking to exit my trade, right? I don't need to pull a fib on this range for anything at all. Why? This is a bullish range. Why am I pulling a fib on a bullish range if I'm anticipating the next week to be bearish? All right? So stops are below here. This is the range. No need to pull a fib. The most important levels have been transposed from the previous week. These are the highs from before. And this is where you potentially expect the low of the week to be formed. Again, if you are familiar with ICT's weekly template, you can look at volatility events and all that good stuff and then get it. So this is the week. I'm going to take off that black line, that black box. Bam. Now, here's your order block. Obviously, ICT did teach this, so it's on his YouTube channel for anybody who doesn't know about it. Here's your order block that you're expecting price to be bearish from. Here's the area where stops are resting that you're anticipating these stops are going to get taken. Now let's look at Monday's range. Monday trades down, didn't take this low, right? So because this is just one straight move and it didn't take this low, you can put a fib on this. Fib on there, you find your OT entries. But we're not talking about that. What I want to show you or share is that this is the order block that we're interested in, right? We're interested in being a seller here at this price, no other price. I don't care about this, right? Based on what I'm sharing here, I don't care about this. There are other reasons or techniques that you can use to get in here, but it's not the topic of what we're talking about. That's the order block. No trade back into that order block and then price leaves here aggressively. So my thought process is no, okay, fine. I already anticipated where the low of the week should form below these lows. So when price trades down here, this is our chart. Again, you could drop to a lower time frame, look for your order blocks, your breaker structures, or whatever you use to enter. Then you get your entry here. Once you get your entry there, if you are trading turtle soup, that's your target, because this is where you originally anticipated the high of the week to form in this order block. We buy here, alter all of that. Again, hindsight, and this is potentially, sorry, my fingers keep slipping off of this pad. Potentially another 148 pip move for the week. Okay, so whatever your entry pattern is, you could have gotten it there. There's a lot of things here that I can talk about, but again, if you see them, it's great. I'm not trying to reteach anything here. So to make that very, very clear, sharing how I review the previous week to plan for my next week. All right. Can see that order block there as well, and then trades up. Gets to here. Once it gets inside of this order block, we didn't close above it. That's the high of the week. So even though we didn't get the high of the week forming exactly on Monday, we did have the price levels identified. And then we can see how the low of the week and the high of the week gets formed exactly where we anticipated. All right, so hopefully this can help you plan for your week. Feel free to backtest it, how many times it actually works. And thank you for watching. I'd appreciate if you like and subscribe. Help me grow the channel as I try to help more traders stop losing